Learning to trade can be overwhelming. I want to talk about why most traders fail and what you can do about it to learn to trade with confidence. In my early days, this is going back several years ago, you know, we didn't have cell phones, we didn't have email, we didn't have access to all of the information that is out there today. Traded off the newspaper, the highs of yesterday, the stocks that had made the biggest move yesterday. So it was pretty rudimentary, but there's so much information at our fingertips today that you truly can self-teach yourself. And I wanted to talk about that today and what I've learned over the years and the method that I use to or the method that I've used to become profitable. And it's pretty simple. I think you'll find that you can do it too. So what I want to get into a little bit here is a concept called backtesting. And what does that mean and how can you use it to advance your percentage of winning trades? Backtesting is a pretty simple concept. It's been around for a long time. The way I do it, I think, is pretty simple. So I just wanted to explain that to you and show you how to use it to confidently place trades in the market. Now, backtesting is basically what it sounds. You're comparing historical data against your trade indicators to come up with a set of indicators that consistently gives you a correct signal on which direction, whether up or down, that you may be looking to get into the market. What you're going to need is a charting software. You'll need that to trade anyway, so it's not costing you anything to back test that you wouldn't already have to spend to actual trade. So the company that I use is NinjaTrader. This isn't a plug for NinjaTrader. It's just, if you don't have one and you want to check it out, you can go online and check it out. It's a pretty simple software. You can download it to your computer. There's also a mobile version or a web-based version that you can use. I just downloaded it to my computer. You'll find out as we talk in this video that my trading style doesn't really require me to have a mobile device. Excuse me. There's a data feed that you'll need to get the charts updated. That costs $12 a month, so it's fairly inexpensive. My all-in on my trading software package is $12 a month. The software's free. You're just paying for the data feed. So once you have that set up, and you have a set of indicators, or maybe someone's recommended a set of indicators, or you bought a course previously that has a indicator package in it. You simply follow the instructions and upload it to NinjaTrader, and then you can see those indicators plotted on the chart. You're going to want to have a trading log. You'll want to maintain that for backtesting purposes, but also, when you go live in the future, so that you can track the trades that you place and look for ways to improve the process. So on your trading log, a couple of simple columns. You'll have a date column. You'll have the commodity column. Whether you're going long and short column, price you got in column, your profit target, your stop loss. We'll each have individual columns. And then on mine, I have a notes column. Essentially, it's the after trade checklist or the after trade evaluation coupled with, some notes on why I got into the trade. So once you have that set up and you've got your chart up, typically what I do is I backtest a year of data at a time, which typically takes 2 to 3 hours. So you can gain a year of insight on how your trading indicators or your trading strategy would have performed had you used it in those previous 12 months. You can do 6 months, you can do 2 years. I would recommend just going back a year because the market's continuously changing and you've got to make small tweaks, here and there as the market changes. That's a whole other video we'll get into. But you've got your chart up. Go back a year in time on your charting software to where you've got the bar that you're looking at is on the right-hand side of the chart. And then that prevents you from seeing anything that would be happening in the future. And then you'll advance your chart one day at a time until you get a trade setup. And you'll look at that trade setup. And if it's a trade that you want to take, log it in on your trading journal and then advance the chart one day at a time or one bar at a time until you either get stopped out of the trade or you win. It's basically that simple. Let's break it down a little bit further. So just to go into a brief overview of my trading strategy, I use a 3 and 6 period moving average crossover with an ADX momentum indicator. And you may not know what any of that means. So let me kind of explain it a little bit. The 3 to 6 period moving average is basically that. It's a moving average set to a 3 period time frame that smooths out the price action. The same is said for the 6 period. I trade on a daily chart, so my moving average is 3 days versus 6 days. And what I'm looking for is that 3 period moving average to cross over the 6 period moving average. And when it does, I have a secondary filter of the ADX, which is the momentum indicator, and I'm looking for it to be, over 20. That's just a number that in my personal backtesting I found somewhat validates the trend direction. And I'll also couple that with looking at the higher time frame chart, that being the weekly time chart, to determine what is the current trend in the market on a higher time frame. Is the market trending up on the commodity that I'm looking at, or is it trending down? If it's trending up, then on the daily chart, I'm looking for a trade setup that would be in the up direction or a bullish direction. And vice versa, if it's trending down on the weekly chart, I'd be looking for setups that are looking to go down on a daily chart. And I'll do the same thing. I'll advance, once I've found a setup on the right-hand side of the chart, I'll advance the chart one bar at a time until my profit target is hit and my stop loss is hit. Now, what do those two terms mean? What is a profit target and what is a stop loss? Well, those are two of the most important numbers that you have to have before you even place a trade. Most beginning traders, when they're looking at something, they're thinking, all right, how much money can I make? I've heard that I can make a bunch of money in the markets, and you can, provided that you manage your risk. And one way to manage your risk, I feel like the most important way to manage your risk, is to understand and commit to how much are you willing to lose in attempt to win this trade. The how much you're willing to lose is your stop loss. And that stop loss needs to be placed as a trade at the same time that you're placing your initial trade. You have your profit target. You better know what your stop loss is. And the correlation between the profit target and the stop loss is your risk to reward ratio. And a typical risk to reward ratio that I'm looking for is 1-to-1, meaning that for every dollar that I'm looking to win in the market on this particular trade, I'm willing to lose $1. And you may ask yourself, well, how can you earn money doing that? That sounds like a zero-sum game. And on an individual trade basis, it is. But the whole intent of your back testing is to come up with a trading strategy, or to plot the indicators that you're wanting to use to where it triggers trade setups that you end up taking that result in a winning percentage of 80% or greater. I typically look for 90%. The back testing that I do normally puts me in about the 90 to 95% win rate. So using a 1-to-1 profit or a 1-to-1 risk to reward ratio, you can see that if I typically, or I'm willing to lose in a block of trades 1 out of every 10 trades, you can see how you can make money. That's how the pros make money. It's not what you win or you lose on an individual trade, but it's the consistency in your trading over time is what makes you money. The other thing that backtesting does is that it shows you, or it proves to you that well, let me back up. There is no proof in trading. There are no guarantees. But what you're looking for is an edge, and by backtesting and having a backtesting result of 85 to 90% of your trade setups are winners, that's kind of your edge. That is your edge. And in doing so, that will give you the confidence that when you see the trade setups come about in live trading, that should give you the confidence to follow your plan, because it's a completely different feeling when you're trading with real money. All of the emotions start kicking in. The fear of missing out, the greed of when a trade's going your way to try to squeak out every little bit, or the hope that the market will turn around if it starts to go against you. You got to get rid of all of that. You got to let go of that. You have to be detached from the outcome. Simply look at trading as a coin toss with an edge. That's how the casinos operate in Vegas. It's worked out very well for them, as you can see if you've ever visited Las Vegas or Atlantic City. So trade like a casino, and let back testing give you the confidence so that when real money is on the line, that you'll stick to your plan. A typical day for me, now I work a full-time job still. I manage a team of professionals in a chemical manufacturing plant. So going back to my early comment about mobile devices, I don't have time to be following along, tracking a trade during the day or trying to make an intraday move. I trade on the daily time frame. That works out very well for my lifestyle and my current profession. And I think for most beginning traders, that's the safe way to learn how to trade. Trade on a daily time frame, and don't get caught up in the rush of trying to make money, or the feeling that you always have to have a trade on. Sometimes the best trade to have on is the one that you don't make. Trust your plan, trust your strategy, let your back testing prove to you that over a larger block of trades that you're consistently a winner. And that's how you'll make money. I've used this same simple strategy over the last, I think it's going on 3.5 years now. I started off with a $7,500 trading account. My first 1.5 to 2 years while I was learning this was a roller coaster ride. I would double my account and then, give all my winnings back, and then double my account and give all my winnings back. And it wasn't until I really became disciplined in following my trading plan that I became profitable. In the last year and a half, that $7,500 trading account is close to $100,000, and it's allowed me to increase my trading size a little bit. I started off trading one contract, and I'm currently at five. So, my two favorite commodities are 30-year bonds and corn. And I also like the mini S&P. So using 30-year bonds for an example, my trading strategy, typically the winning dollar amount is about, on average, about the $900 range per contract. So at five contracts, it's typically around $4,500, versus a single contract where it's 900. So there is a sizable amount of money to be made, and if I figure if I continue on this path, maybe over the next year or two, my ultimate goal is to be trading 10 contract lots, which will more than replace the income from my regular job, and then I'll kind of have a decision to make, and do I want to continue working, or do I just want to be a full-time trader? I don't know. We'll see. I enjoy my work, so maybe I'll do both. One of the other things that backtesting will allow you to do is to not listen to all the noise that's out there. I don't follow anything on my phone that has a ticker, showing me in the moment, what a commodity is doing that I may be in a trade on, or listen to any of the financial news, or any tips or tricks from a buddy or from a financial newsletter or whatever. Cancel out that noise. Get rid of it. When you're trading successfully and you're following your strategy, trading is actually kind of boring. In the beginning, when I would win a trade, I thought I had it figured out, and you're ecstatic, you're happy, you're like, oh, this is so easy. And then when you lose, you're emotionally attached to that loss, and it's a roller coaster. It's a roller coaster that'll cause you to be impulsive, and in trading you can't be impulsive. So one of the biggest things you'll need to work on and gain control over is your emotions. Trading, you need to be emotionally detached from the outcome, like I said before. The market's going to do what the market's going to do. All you simply have is a slight edge that you've found through backtesting to increase the probability that your trade will be correct. But be prepared for it not to be, and that's the importance of your stop loss. That predetermined amount that you're not going to go below, or you're not going to lose more than, before you exit the trade. So make it automatic. So just to recap, please backtest if you're a new trader. Don't be in a hurry to jump into the market. Backtest your idea. Prove it to yourself that it'll work before you risk any real money, because once you start live trading, your biggest challenge is going to be overcoming your emotions. And I'm here to tell you, once you do that, the sky's the limit. If you got anything out of this video, please give it a thumbs up. If you want to follow along with the channel, I drop a video or two a week, discussing topics that I think are beneficial to beginning traders. I record these videos primarily for my kids who are still somewhat young, but to give them something to look back on at a future date, and gain some knowledge and insight on how to trade if and when they become interested. Please take advantage of this. Yeah, so that's all for today. I'm going to go ahead and sign off. Have a great day.